So this is the second sample paper. So the first question is, as per section 462 of Companies Act 2013, the financial statements of a startup private company may not include balance sheet at the end of the financial year, profit and loss account for the financial year, cash flow statement for the financial year, statement of changes in equity if applicable. The answer is cash flow statement for the financial year. Second question. When an impairment loss occurs, the carrying amount of the asset shall be reduced to its. So in case of impairment, what do we compare? We take the carrying amount of the asset and then we compare it to the recoverable value. Okay, so let's start. So we compare the carrying amount of the asset with the recoverable value. Okay, so that's why they say the value of the asset shall be reduced to its recoverable amount. Next is the third question. Segment revenue does not include. So I'll tell you what it actually includes so that we can exclude those things from the options. So the first thing which it includes is whatever is directly attributable to the segment, it will include. Second thing, which you can allocate on a reasonable basis, that will also be included in segment revenue. And the third thing is revenue from transactions with other segments of the enterprise. So these are three things which will be included. So obviously A option is the one which will not be included. Gain or sale of investments unless the operation of the segment are primarily of financial nature. Next we come to the fourth one. In an operating lease, the lessee should recognize the benefit of incentive as. So what are these incentives? So lease agreement may actually include incentives for the lessee to sign the lease. Now, for example, it will be an upfront payment to the lessee. Okay, that's an example. So how do you recognize these? You recognize them as a reduction of rental expense over the lease term on a straight line basis. The fifth question. An entity should present the statement of cash flows more prominently than other statements, the balance sheet and statement of profit and loss more prominently than the other statements, notes to other accounts more prominently than other statements, each financial statement with equal prominence. Okay, the sixth one. The cost of an internally generated intangible asset does not include. So while reading the question, we have to be careful. It says does not include. So first I'll tell you what all it includes. It includes the directly attributable expenses, which are relating to creating, producing and making the asset ready to use, okay, ready for its intended use. Now in that, salaries of personnel directly engaged in generating the asset will be included. Materials consumed in generating the intangible asset will be included. Fees to register a legal right will be included because all these are directly attributable. You need these to bring the asset to its ready for use condition. A. Expenditure on training the staff to operate the asset. This is the one which will not be included. Next question. A non-cancellable lease cannot be cancelled. A. Upon the occurrence of any contingency. B. With the permission of the lessor. C. On the request of the lessee upon payment of an additional amount. D. If the lessee enters into a new lease for a different asset with the same lessor. So a non-cancellable lease cannot be cancelled if the lessee enters into a new lease for a different asset with the same lessor. But if they ask, a non-cancellable lease is a lease that is cancellable only by ABCD. A. Upon the occurrence of any contingency. B. With the permission of the lessor. C. If the lessee enters into a new lease for the same or equivalent asset with the same lessor. So all these cases which I told now, this will be when you can cancel a non-cancellable lease. Okay, so when can you cancel a non-cancellable lease? Upon an occurrence of any contingency with the permission of the lessor. If the lessor enters into a new lease, but that should be for an same or an equivalent asset with the same lessor. In these cases, it's cancelable. As per AS 10 PPE, an enterprise holding investment properties should value investment properties under the cost model. Now AS 17. Reportable segments are those whose total revenue from external sales and inter-segment sales is 10% or more of the total revenue of all the segments. So there were three rules, right? 10 or more of the total revenue of all the segments. The second rule was 10% of the total profits, and the third one was 10% of the total assets. The next one. As per AS 20, information regarding basic and diluted EPS is to be disclosed on the face of statement of profit and loss. Which item of inventory is under the scope of AS 2? Raw materials, shares, debentures held as stock in trade, not this. Inventory of livestock, agriculture, and forest produce, that's not covered under AS2. WIP arising under construction contracts, that's also not covered under AS2. Which account cannot be used for issue of bonus shares as per Companies Act? It's the revaluation reserve.